Hi traders, in this very video I'm going to be teaching you guys how to create a trading plan. So this video is going to be a step-by-step guide on how to create a trading plan. So right here I've written down about 6 steps on how you can create a trading plan. Now for every single deposit you make, with this you can create a plan for that very deposit, on how you're going to trade that account, on how you're going to grow that account, right? Every single forex trader dream is to fund an account, grow it. Even if you trade a crypto market, for you to fund that account, trade on that account and grow it. So I'm going to talk about strategy, risk management, literally everything you need to know in growing that account. It's going to be a step by step on how you can create a trading plan for your next deposit or for your trading account. So I'm not going to waste time. Let me jump in. Now, the first step in creating a trading plan, the very first step in creating a trading plan is your strategy confirmation. Now, this is one of the most important things in trading, right? Not the most important, but it's one of the most important things. If you're going to take a trade, what's going to make you enter that trade? Why do you feel you should be taking a buy at that very region, or you should be taking a sell? If you consider buying at a region or buying at a certain price level, you want to check, right? What's making me take this buy from this very region? And if you're going to sell, what's going to make you sell from this very region? Why is the price not going to go down, right? And if you're going to buy, why is the price not going to go down? And if you're going to sell, why don't you think the price is going to go up? So these are the first thing you want to always consider. This now is going to give you an extra confirmation that, okay, I'm doing the right thing. And where is that going to come in? When you have a strategy confirmation, when you have an edge over the market. And the strategy confirmation is going to give you an edge over the market, because with that, you now know what you should be doing at a certain price level. Or if the price is at a certain level, what you will be doing. And like you guys already know, the strategy I use is my structure. You guys already know that. I use my structure, my liquidity, and POI. These are the 3 things for my strategy. The structure is going to show me the current directional bias, the current order flow, the current market structure. So I will know if I'll be buying this very market or I'll be looking out for sales. Then liquidity is what's going to be protecting my POI. While my POI is where I'll be taking the trade. Just the 3 things I'm going to likely take the trade. And these are the 3 things I need for my strategy. Now you want to check, do you trade a trend line breakout, or do you trade your moving average or the stochastic RSI? Any strategy you trade at all, make sure that strategy has something that's going to make you enter that trade, and also it has an edge. You have seen people using it, and those people have a good win rate, and you yourself, you have actually tried it out, and your win rate is pretty cool. Even with a 50% win rate, you can still be good with that very strategy. You don't need any other strategy. You just have to get the confirmation you need, the rules guiding that very strategy, literally everything you need to know about that very strategy. Then you build it up to your own trading system, right? Make it suitable for you, of which I'm going to tell you later on. Build up that strategy and make it a suitable trading system for you. It will not be like you are the one who's going to do the analysis, right? You're the one who's going to use that strategy. So build it as if it's your own personal strategy and use it the way it's going to suit your trading style. So that's one thing, your strategy confirmation. Meaning, you don't just go to your chart and then jump on a buy because you feel the price is going to buy. Or you just go to your chart to jump on a sell because you feel the price is going to sell. Now, me personally, if the price is not in an order block, which is the POI, those are not the strategy I trade. My other YouTube video on the strategy, you can go check them out. Now, if the price is not in an order block or a breaker block, there is a chance that I won't be taking that very trade. Why? Because those are my point of interest. Those are points where I will likely take the trade from. Same thing. You might say if the moving average does not cross each other, I'm not going to take this trade. Just things like that. With that, you'll be able to easily know what you will be doing at a certain price level. Now, the second thing with this building up a trading plan, the first thing is your strategy confirmation. The second thing is your risks per trade. Now, this is going to bring us to one of the most important things in forex trading. Now, trading is always how you are able to manage your emotion, how you're able to also manage your account. Now, risk per trade is this. If you fund any amount, you put in about $1,000, depending on how much you're able to fund, right? You save up some money, or you had some side hustles, right, that you do, then you make some money, then you want to put it in your trading account and trade that account and trade that money, right? Or you have some other things, some other source of income, right? You put in money in your trading account, maybe $1,000, $100, $10,000, right? Now, on this very account, you want to trade this amount and grow it. right? Your plan is not to take one trade and then lose the whole account. Now, to grow this account, you want to first pick how much you'll be risking on a single trade. So your next deposit, follow these steps. First thing, how much will you be risking on this very account? On a single trade, you can see I'll be risking 10%, and 10% of this $1,000 is about $100. And how are you gonna pick? Let me put it this way: how are you gonna pick that you will be risking 10% of that account, or you go for 1%, or you go for 2%, just things like that, right? Now you want to first check if I start risking 10% from this account, or I start risking 1% from this account, is that amount suitable for me to lose on that very account or on this very account? If you found your $100 now, is 10% suitable for you? If 10% is too much for you to risk, and if 10%, which is $100 on a $1,000 account, is too much of a risk for you, meaning you can't afford to just lose $100 on a single trade, you can always reduce it to an amount that is going to be suitable for you to lose, and you won't feel bad, you won't feel any emotion, you won't feel terrible, right? Though if you lose, you're going to feel bad, right? But you won't feel terrible and you won't feel extremely bad. So if 10% is suitable for you, then you go for the 10%. And the second thing you want to consider is, if you're now risking 10%, it's now clear that you're going to need 10 trades. That if you now pick that on this my next $1,000 deposit, I'll be risking 10%, meaning I'm going to need 10 trades. After 10 trades, that's 10 losses. After 10 stop loss, you blow this account. Now you want to check, okay, with the strategy I trade, with the way I've been trading for some time, is there a chance that I will hit 10 stop loss in a row? With that, you will check, is there a chance that I will blow this account? Now, if you are risking 10% from a $1,000 trading account, which is about $100, the $100 is already what you are comfortable losing. Then you want to check, how many trades do I need before I blow this account? And risking 10% is about 10 trades. So meaning, after 10 stop loss, your account is gone. If that's okay with you, then you can go over, pick that certain percentage you'll be risking. If you're risking 5%, meaning you're going to need 20 trades, just like that. So, and another thing, you want to always stick to this risk. With what I said in the first way you create a trading plan, is for you to have a strategy confirmation. What's going to make you take the trade? Same thing applies to this. You want to always stick to a certain risk you've already planned on taking. Later on in the live, I'm going to teach you about discipline, how to stay disciplined with what I've just given you. You want to always stick to your risk. If you plan on risking that 1%, stick to that 1% risk. And what I do is, if you want to now increase your risk, you are getting greedy, you want to make more money, you want to increase your risk. What I do is, once you have doubled the account, right, double or triple the account, then you can increase your risk from 10% to maybe 10% of your new balance. If you found $1,000 and you double the account, 10% of a $2,000 account now is going to be $200. So you can increase it to $200 risk on a single trade, just like that. Until you've doubled that account, that's when you increase your risk. Not when you have made profit, then you start increasing your risk. Then the third thing with this trading plan is going to be your risk to reward ratio. With the risk to reward ratio, I believe many of you already watching this, you guys know what risk to reward ratio is, right? This is what's always gonna help you make the most money in trading, right? The bigger the risk to reward ratio, the more money you are gonna make, and the better your risk to reward ratio, the better money you are gonna make. Risk to reward ratio is always what you are risking, right? What you are willing to lose to what you are gonna potentially make. If you take a trade and you risk 10%, which is about $100, what are you expected to make? What's your expected return on that single trade? So if I risk $100 now, I'm expecting to make at least times 3, and that's what I always teach. Your risk to ratio should be at least times 3 of that very trade. I mean, if you're risking $100, you should make at least $300 from that very trade. If you hit take profit, then if you hit stop loss, you should not lose more than that $100 maximum. So this is the third thing you creating a trading plan. And many of you are gonna go over and start going for crazy risk to reward ratio. Start going for 1:10, 1:20. Start looking for those big risk to reward ratio. Definitely, you are gonna make more money on those risk to reward ratio, right? With a 1:10 risk to reward ratio, if you take a trade and you start risking your 10% with a 1:10 risk to reward ratio, if that trade hits take profit, you've doubled that account. Your $1,000 is now $2,000 because you've made 100% profit on that very account because you doubled. You had a crazy risk to reward ratio. You're gonna make more money. But if you are still learning, you are still a beginner, you are still building up a trading system for yourself, I will recommend you have a certain risk to reward ratio you always target. Target your 1:3, 1:4, 1:5, and you collect your profit. Once your trade is up 1:3, you can see that I will be taking my profit. Once it's up 1:3, once it's up 1:4, I'll be taking my profit. With that, that's how you build up confidence, right? And also that's how you build up and scale up your account more faster. Then if you are now confident, you are now disciplined, you are now much confidence, you can now keep holding trade till it gives you your 1:10, 1:20 risk to reward ratio. But for now, since you are still building up your confidence, building up your trading account, just stick to your setting risk to reward ratio, and it should be at least 1:3. And this is going to help you grow your account. And this is how. Once you fund the $1,000, your plan is to risk about $100 per trade. Now, even if your strategy win rate is 50%, meaning out of 10 trades, you are winning only 5. So you took 10 trades that very week, of which I'm going to still explain later on. You took 10 trades that very week. Out of these 10 trades, you lost 5. 5 of these trades hit stop loss. And the 5 of these trades hit stop loss now is going to be equal to about $500, because you are risking just $100 on a single trade. Then if 5 of these trades hit take profit, of which you know, if 5 hit TP, it's going to be your $300 now times 5. And $300 times 5 now is going to give you about $1,500. Meaning, with a good risk to reward ratio, now making at least $300 on a single take profit and risking nothing more than $100 on a single trade, you've backed yourself $1,500 profit. And now, if you remove your loss, you lost about $500 that week, you see yourself losing only about $1,000. You've ended that week making about $1,000, even after having a 50% win rate. That's very weak. Taking 5 trade, hitting 5 stop, taking 10 trade, hitting 5 stop loss, and hitting 5 take profits, you've ended that week doubling your account. Why? Because your risk to reward ratio was good and you stick to your risk. But if you don't risk this, you risk $100 today, the next day you are risking $200, you are reducing your risk to reward ratio and you are reducing your potential profit you are gonna make. Now, if you want to make more money, you feel I want to scale up, I don't want to risk $100 again, I don't want to risk this little amount. If you want to scale up, once you have doubled the account, your account is now $2,000, you can now say, okay, let me start risking 10% of this $2,000 trading account. And 10% of the $2,000 trading account now is going to be $200. So you've increased your risk. Until you've now doubled the account again, you can now increase it to 15%, depending on the risk your appetite can take, with what I gave you in the first 10. Now, the third thing in you creating a trading plan is going to be your number of trades. This is another important thing in trading, right? This is going to be your number of trades a week, a day, a week, even a month. Now, you want to consider yourself. Are you a day trader, or you are a swing trader, or you are a scalper? With this, you want to first pick on a normal, how many number of trades will I be taking maximum a day? A day, you can see, I won't take nothing more than 3 trades. If that's a plan you've created, just write this down, nothing more than 3 trades. Or you can say, I won't take nothing more than 4 trades, or nothing more than 2 trades. Right, just like that. Then in a week, you'll see that's going to help you avoid over trading and also avoid taking unnecessary trades. So if you have a certain number of trades you're going to be taking in a day or a week, you will be selective because you don't want to exceed your limit before you run out, before the week or the day runs out. Because if you go over, say, I'll be taking 3 trades a day and nothing more than that, I'll be taking 3 trade max a day. If you go over, take the first trade, it went well, you hit take profit. You took the second trade, you didn't even watch out for your strategy, you gambled, you took it. You're going to have the third trade, then you still took it, you didn't even watch out for your strategy, you still took it. If you have the fourth trade and your strategy is now complete, you still want to take it. Now you've over traded, you've exceeded your trade on that very day. Why? Because you've traded those trades, or you've taken those trades you were not meant to take. Now your setup is going to present itself maybe those 2 times, but now you've taken 4 trades, which has now made you over trade. So you want to be selective. Only when your strategy is complete, everything is complete, that's when you go over, take the trade. Because that's going to help you avoid taking unnecessary losses and also avoid blowing your account. The fourth tip right here is your number of losses. By creating a trading plan, I've given you about 4 steps right? The 15 right here is your number of losses a day or a week. This is also extremely important. From this account you just funded, from this your $1,000 trading account, you want to pick how much am I going to be risking on a single trade, and you're risking 10%. Then how many stop loss do you need to hit a day before you stop? You are definitely going to lose. That's why risk per trade is always important, because you are not guaranteed. If you put $1,000, you can take one trade and you lose the whole $1,000. Even if you put $100,000, you can take one trade and lose the whole $100,000. So you have to have certain amount you are risking per trade. Now you want to pick, what's my drawdown a week or a day will I take? If I have a drawdown of 2%, if I have a drawdown of 1% a day, will I stop for that day? This is the 15 right here, which is gonna help you create a trading plan. Now, me personally, after 2 losses a day, once I hit first stop loss, second stop loss, I'm done for that day. Right then, after 4 losses a week, first stop loss, second stop loss, third stop loss, fourth stop loss, in a row, I'm done for that week. Even if I hit first stop loss on Tuesday, I'm gonna stop trading for that week, come back the next week. This is gonna help you avoid taking unnecessary losses. Right? Losses can be avoided when you avoid taking unnecessary trades. Now, a key thing you want to note from this is this: if you go over, watch yourself closely, right? Watch yourself closely and do what I'm gonna say now. Go over, take trades, right? Mark out your strategy confirmations, right? Take 10 trades with your strategy complete. Order block, breaker block, liquidity, structure, mark out everything. Then you take 10 trades. Out of those 10 trades, at least 5 of those trades are gonna go well. But if you're not disciplined, you see yourself taking 15 trades, and those remaining 5 you are not meant to take, which market is going to give you 5, 10 opportunities that very week. But you are taking 15 trades. Those other 5 you are not meant to take now, they are just trades you just took out of your imagination or out of your expectation. You don't have your structure, you don't have your liquidity, you just want to jump on a buy because you don't want to miss out. Right now, if you take that very trade now, it's not part of your strategy, it's not part of your system. If you do that, you are just taking unnecessary trades, and it's gonna make you take unnecessary losses. What do? You have to have a certain amount of losses a day or a week. And if you have that, you can always stick to that. If you lose this amount, I'm done for that day, I'm done for that week, then you relax. You come back the next day, you come back the next week, and try again. Now the 6th thing right here, which is the last thing, is gonna be the pairs and even trading sections. So you can always pick certain pairs you will love to be trading every time, and then even pick trading section you would love to trade. And this is always gonna be one you will find the one that is always working for you, right? If London section is always favoring your setup, going well for you, you can see I'll be trading the London section mostly. Almost every London section I will always show up on the chart and see if I will have an opportunity. Same thing with your pairs. Selecting few pairs is one of the most important things in trading, right? Every trader and most traders, they even have their single pair. They have a single pair which is always making them consistent profit. Why? Because that pair, they have studied it, they have traded it for some time, and that pair is working for them. But if you don't have a certain number of pairs you trade, you just pick up random pairs any day, you want to trade that very pair, you're going to see yourself studying pairs every single time. So if you have a certain pairs you trade, stick to them and always make sure you trade those pairs, because that's going to help you understand how the pair move. Right? Gold always respect order blocks and breaker blocks. Why? Because I've watched out gold, I've seen how gold is moving, I've traded gold. So you pick few pairs, at most 5, right? It should not be more than 5. You pick them and you keep trading them. Right now, staying disciplined, which is one of the most important things in trading, right? I'm going to teach you how you stay disciplined. I'm going to give you about 4 steps on how you stay disciplined in the market, stay disciplined in trading. Now, before I continue, if this video is helpful, right, you're getting value from this very video, smash on that like button, and also subscribe if you are new here, and also share with your friends so they can easily go through it, understand what I'm saying, go over, do what I'm saying, and they will start seeing profits. Right? Then drop a comment if you feel this video is helpful so YouTube can recommend it so that other people can find it. Then if you want to learn from me directly, you want to join my mentorship class and then learn trading, learn my trading system, learn everything, risk management, psychology, everything from me, click on the link in the description. You're going to find the link for the mentorship. Click on it and you'll be redirected, and then you join. Right? So the registration is currently on. Just click on it and you'll be redirected. Now, these are steps on how you build up your discipline, right? On how you stay disciplined in the game, how you build up your discipline in trading. Now, the very first step is this. It's going to be, why Does trader lack discipline? Or why do trader lack discipline? That's the first question you want to always ask yourself. Why did I lack discipline? You just blow your account. Why did you blow that account? You just lost your funded account, or you just lost your account in the phases. You're trying to pass phase one, you just lost the account. You bruised the account. Now you're gonna ask yourself, why did I bruise that account? Was it that I was not disciplined? Was it that my strategy is not working? Was it that my risk management was not good? Why did you bruise that account? Now, these are things that's gonna make you lack discipline, and that's gonna always make you bruise accounts, blow accounts, and overtrade. Just do things that is not meant that you are not meant to do in trading. Now, strategy is one thing. Strategy is just about 20% of what trading actually is. If you want to actually build up a trading system, become profitable, strategy is less of a concern for you. It should be how you control your psychology and also how you manage your accounts, you manage your risk. Right? Strategy is important. Strategy, if you don't know, if you don't have an edge over the market, you won't be able to do anything. But risk management and your emotion is always going to take the biggest thing. Now, first thing that's going to make you lack discipline is going to be greed. So if you are greedy, you're trying to make more money, you're going to lose. If you take a trade, you get stopped out. Relax. If you're taking buy, you get stopped out. Then you start to take sell. That's you being greedy. You're trying to make more money. You're trying to revenge trade, and that shows you that you're lacking discipline. But if you want to make more money, that's gonna just show that you lack discipline. Because in that case, you try to revenge trade, you try to over leverage, try to over risk, or you try to flip accounts, try to gamble. But that's not how you trade. So one thing that's gonna make that is always making traders lack discipline is gonna be greed. Right? They try to make more money. Then the second thing is always fear. Right? They're always afraid of losing more. And this is not gonna be something I'm gonna say you are doing bad off, right? I'm not gonna beat you up for this because it's normal, right? Nobody is here to lose money. If you're always losing, you're gonna be afraid. You have a setup, you will not take it. You have an account, you won't want to risk much. Why? Because you are now afraid of losing. You've lost a couple of dollars, hundred thousands of dollars in trading. Now you are now afraid. Now what I'm gonna do is for you to build up, or what I'm gonna tell you, is for you to build up confidence, right? Markets don't always keep track record. You did those losing because maybe you don't understand risk management, or your strategy was not working, or your psychology was messing you up. You want to go over, work on those things. With that, it's going to remove fear and it's going to start building up confidence. Now, you being afraid, I've taught you what's going to make you that. If you're always losing, right, what's going to make you being afraid? When you're always losing, you're going to be afraid of now taking trade or of now taking risk. Right now, to remove that and also start building up your confidence, go over, check, why am I always afraid? Why am I always losing? Or why am I always taking losses? Why am I always blaming my account? I want to check, okay, is it my greed? Is it my strategy? Is it my risk management? Or my emotion is always coming in? With that, you just evaluate your key problem, then you go over, work on it. Then the third thing is going to be you lack discipline. And this discipline is when you don't trust your edge. You don't trust your edge. You don't trust your analysis. You don't trust what you are doing. And it's always going to be a problem. Now, like I told you, in creating a trading plan, right? Trading is always when you build your own personal trading system, risk management plan, your strategy plan, your RisktoReward Ratio, number of trades. That's how you build up a trading system for yourself. And if you now have a personal trading system, trust me, you will not be confident enough to tell people about your trading system, and people are going to likely follow up with your trading system. Once you are not confident, once your trading system is proven and you feel is working and is working for you, you now have the confidence to say, okay, let me go over and start sharing it out so people will see how good I am. I'm good. You won't win every single trade. You need to accept losses, right? Which is the greed. If you don't accept losses, it's gonna be terrible. If you're afraid you don't accept losses, it's gonna be terrible. And like I told you, market don't always keep track record. You are the only one who's gonna keep record of what you are doing. So if you go over, start watching out for your previous losses and then using those to make decisions, it's gonna always be bad. Right? Now the fourth thing is always gonna be pressure. And this always happens most of the time, right? Even my students, they have been through this. Right now, this is what they do. Right? One, if you take a trade, you funded the $1,000, you're taking trade, right? The first trade you took, you raised $100, you made $300, right? Now, and you need to solve something urgent, right? You need about $2,000 to solve something urgent. You're gonna see yourself risking about $500 because you now feel, let me make that money quick. Let me take this trade. Let me see if I can make that money. Then let me jump out. With this, you increase your lot size. You've ignored your risk, and that's now pressure. You have something you want to settle, you have something you want to get, you have something you want to do, and it's gonna make you trade out of pressure, trade out of emotion. Because now you're not gonna omit your risk management, your strategy, and you start trading off of your emotion. Then the fifth and the last thing is gonna be you lack self-discipline. Now, in real life, if you lack discipline, trading is gonna bring it out. Right? In real life, if you lack discipline, trading is gonna show you that you lack discipline. Right now, what do you want to do? You want to always make sure you stay disciplined in real life. If you say you won't do anything, right? Stay disciplined and make sure you don't do that thing. You don't repeat that thing. If you make a choice, right, you're not gonna do anything. You're not gonna go check your chart. You're not gonna go watch football. Just go over, stay disciplined with yourself, and make sure you don't do that thing. It can be, I'm not gonna play PS again. I'm not gonna just stay disciplined to yourself. Stay true to yourself, right? Follow what you have said, and in the market, you will be able to do same. But if you are not disciplined in real life, trust me, only a single move, right? Only a single shake in forex will just bring out the demon in you, right? So that's the system that's gonna help you stay disciplined, and that's the reason why traders always lack discipline. Going through the reasons why traders always lack discipline, you're gonna see this is also a way you can easily build up your discipline. All of this now comes down to when you are greedy, and also when you don't have confidence in yourself. If you are greedy, you are gonna lose more. If you don't have confidence in yourself, you're gonna miss out on profit. That's all what discipline is. Don't get greedy, stay disciplined, have confidence in yourself, and always do with your trading plan, of which I just gave you. Strategy confirmation, risk per trade, your risk to reward ratio, your number of trades a day, your number of losses, your trading pairs, right? Then stay in discipline, right? Now, if you're able to follow this, in no time you start seeing yourself bagging good profit from trading. So I'll see you guys in the next video. If you like this video, just if you love videos like this, subscribe and turn on the notification bell. And I'll see you guys in the next video. So take care, guys.